Have you ever asked yourself why price moved? Why did it take out that high? Why did it not take out that low? Asking yourself why the candles move at all and start treating the study of price as a science. In this video, I will be teaching you the Purge and Revert scenario. This strategy has a few different names. You can call it turtle soup, you can call it a run on liquidity, call it whatever you like. But the fact is, it is the foundation of all good traders' understanding of price movement. Mastering this is the difference between winning a few trades and running a damn clinic on the market. This is the third installment of the series, One Trading System to Rule Them All. As you'll see, this is going to solidify it as being the one strategy to rule them all. And your look for the ultimate strategy and system is over. As always, this channel is no fluff, no BS, no guru jargon. This little guy here, he is what we're going to refer to as dumb money. This guy thinks that patterns in price that look like this are good places to put what above them? Stop losses. And as the dumb money, because there's a lot of them, they put a lot of stops above double tops and double bottoms and other areas that they've been told to. Now, I get to call them dumb money because I used to trade retail concepts, so that gives me the right to. What exactly are we looking for in the charts? Where price has moved down and has consolidated, price comes up, starts to consolidate, and then we're looking for the traps that the informed money, the smart money, the traders that are inside the circle of understanding. What happens after consolidation? A reversal. At the highs of these consolidations and the lows of these consolidations are going to be pools of liquidity. Why is there pools of liquidity there? Because people place stop losses guessing which side of the market's going to break out. But you know what the funny thing is? Price most of the time is going to take out this side first and then rally, or take out this side and then go down. Not only did the people enter in here thinking it was short, they got stopped out, and so did they. It's a double whammy. Everyone's out of the market. Now the market can move freely and spool price. That's something I call high quality Purge and Revert scenarios. These are large liquidity pools where retail traders believe their stop losses are going to be safe. Previous day's high, previous day's low. First off, we have previous day's high and previous day's low. These are high quality Purge and Revert liquidity pools that offer the scenario that we're looking for. Then we have equal highs and lows on a 30-minute or higher chart. The higher the time frame, the more traders that are going to be placing stops there, because under a 30-minute chart is a 15-minute chart, same equal lows. Under a 15-minute chart, there's 5-minute lows, same equal lows. Under there, you have 3, 2, 1, and so on. So the higher the time frame, the more liquidity built up below them. And then last but not least, we have session highs and lows. What do I mean by session? I mean pre-market, Asia session, overnight, London, whatever you want to call it. It's a time frame, and a period of time that we're going to use as possible liquidity pools. Now, these aren't all the high quality liquidity pools. These are the top 3 that I like to trade. If you're a trader that is familiar with this concept and you use a different liquidity pool, would you put it in the comments for the traders that don't know, so they can look at the comments, see what else is working for other people. Now we're going to walk through how to apply this strategy to your trading. All right, here we are on the daily chart. I want to take a look at the daily chart on ES and NQ and show you guys something. If you ever notice, pretty much every reversal has the same characteristic in it. It ran the previous day's high, boom, or low if it's a downside reversal. Previous day's high, boom. Previous day's high, ran, closed on a down. Previous day's high, ran, closed down. Previous day's high, ran, closed down. Previous day's high, ran, closed down. So are you guys noticing a pattern here? a reversal to the upside, ran the previous day's low, up, ran the previous day's low, up. And then you can find 100,000 examples of this, on and on and on. To show you that reversals tend to begin with the purge and revert scenario taking place. Now that you guys saw what it does on the daily chart, let's go into the actual purge and revert that ICT originally taught. This is his concept. I did not add anything onto it. I do add some nuances on the lower time frame, but because it is 100% his concept except for the nuances, I want to do it justice. I'm going to break it down step by step exactly how he teaches it. Look for a market that is consolidating and has an old lower high. That's step one. Step two, when the price runs below the old low, consider it a liquidity purge event. Number three, count that day as day one and look back 3 days to identify any significant liquidity pools above the daily highs. So what does that mean? This is a major daily high. There's going to be a lot of stops here. It's also equal high with that candle right there. So it's a double top. A lot of liquidity built up there. As price runs, this is going to be day one. Now we're going to look back up to 3 days. This is the 23rd of August. And look for any major liquidity. It's 24th. So we can go up until here, which I would consider this consolidation having major liquidity underneath of it. You have equal 1 hour lows here. It is also a daily low as well. Let's put this line right there below this low. Okay, now this liquidity has been purged, right? The stops have been ran. The liquidity is no longer there. This scenario takes place after a run on liquidity. It is a cause of a major reversal in the market. Price is likely to revert back into the range from high to low and then fill an imbalance or take out the other side of liquidity. Steps 1 through 3 are completed. Step 4, use the midpoint or equilibrium of the price range as a filter for potential trade entries. Monitor the price action in the days following the purge event to see if the market reverts back to the buy side liquidity. In case this would be sell side liquidity because it took buy side liquidity. Something to notice here is notice that this high or this low to high, this is just within the equilibrium of this range. After it breaks this low, it's likely to start acting different because the algorithm is going to go into a different mode. As you start seeing, the likelihood of it continuing down with this being external range liquidity is low. It's in a deep discount. It's likely to retrace. As we're seeing now, it's retracing back into the range. Now this is a new purge of liquidity, right? Is this down here? Any consolidation is going to offer this setup. And that's why I have added it into the one system to rule them all. Because without it, it can't be a complete system, I don't believe. Without liquidity concepts added in, because you need something for reversals. Yes, the intermediate term market structure shift is great for short-term reversals, but for the longer-term reversals that are going to offer us a direction and bias, it works on the 1 hour. As you can see, if you look at the chart, there isn't a break of an intermediate term low this whole way up until right here, and that's where the reversal's at. But we still need to incorporate this to know where price is going. Let's go into the nuances of trading purge and reverts. Let's see, does the session get ran? Okay, session ran right there. That's probably a really good one. But you notice here it goes down and it doesn't really start moving back up for another full hour. I like the instant ones that are very quick. You know, my Judas swing setup, that is purge and revert too. It's just a smaller area of time. So the liquidity pool is not as big. Therefore, it doesn't offer as large of a reaction afterwards. You can think of purge and then revert as reaction. Purge and reaction. Let's go down to a 3 minute and I'll give you guys the lowdown on how this is going to work. And then I'll give you an example of how you're going to add the ITOB into it and the intermediate term market structure shift to give you a amazing trade. Now you guys starting to put the pieces together. You have ITOBs for continuations and trends. You have Purge and Revert for bias, draw on liquidity, and consolidation trades. Now everything is covered. You have reversals on your short term, your lower time frames, confirmation for trades. You have ITOB for continuations in trend trading. You have Purge and Revert for bias. DOL stands for draw on liquidity, where price is going. And it also works really well on low time frame consolidations, New York opening for low time frames, and high. So every market condition has now been covered. I mean, what else do you guys need? So with that being said, do these positions offer good R&R? Like, for how much you're risking, does it reward you 2 times or more? Absolutely. Then there you go. That's all you need. You don't need anything else. Your look is over, guys. Just trade this system. I promise you, you'll be profitable. We're on the 3 minute now. We're waiting for the run on this low. There's one major nuance that I want to talk to you guys about. Okay, so we had the run. It has now dipped below that line. Now, how are you going to trade this? Hopefully you guys already see it, right? If you've watched my other videos, you're like, oh, there it is. Boom. Why is this where a market structure shift? We're not going to listen to them other guys, are we? No. Those guys would have said any high and low is a market structure shift. No. We don't play that way. That is ITMSS. Why? Because it filled this fair value gap right here. Boom. Ran it. Boom. Then you wait for a dip down into a fair value gap. Preferably it would have been better if it was down here, but I still think that's a good entry. Target, internal range liquidity. Boom. Done. What's the R&R that you would have put your stop below this fair value gap? Say 5R trade or 4.5R trade. 72 points equals $1,400 with one NQ contract. Let's look at an example on ES. Now this indicator is really going to help you guys find this. I went over on my live stream a bunch. I'm not going to do it in this video, but it will definitely help you guys find the highs and lows you need to be looking for to be ran. Let's look at this daily high right here. I feel like it's a good example of a purge and revert because you have a daily high there. Yeah, this is a good example. It's right before the New York opening at like 9:20, so that's good enough. Now this strategy works on all products. This one, but the other ones are not going to work as well for Forex, guys. My recommendation is you guys ditch Forex because the shit sucks and go to futures. Well, you'd be like the prop firm, blah, blah. The futures prop firm trading is 10 times better. Every single person I have asked and gotten to switch is happier trading futures. If you're one of those people, tell them in the comments. Tell them how much better it is. Tell them how much easier it is. So I know there's quite a few of you guys. Okay. Now, this is the run on liquidity. This is a good example because this is what it usually is going to look like. It's usually not going to be one candle and then it goes. It's more like a consolidation. We're going to put a box around this consolidation from the high of it to the low of the consolidation. And we're going to use the candle closes at the top. Okay. Price comes up, it runs it, it drops back down. But did it put in an intermediate term market structure shift? No, it did not. We're not going to mess with that. The big nuance is, where is price consolidating at? Is it consolidating above the liquidity line? Because if that's the case, it's going to go up. Or is it consolidating like this one is, where most of the price action, at least 50% of it, is below the line? Now, if this was just on top of their consolidating, then it's putting in a breaker. We don't want that. We want to see price come in and then go back down and then kind of do this. But with the majority of the price action happening below the liquidity line. This is just one of the nuances I figured out by studying price. I just noticed it after trading and losing so many times. People talk about failure enough, because failure teaches you a lot more than winning does. I spent a long time failing and struggling. I think that's where my knowledge of price comes from, is my unwavering ability to quit and my long-term failure before it becomes success. So this is what you're looking for. Preferably if it's all the way underneath it, but this is acceptable. Because after your price runs a high, you're going to start looking for 3 pushes. 1, 2, 3. And then what are you guys going to look for? What reversal technique did I teach you guys that kills the game? Intermediate term, structure shift. The one reverse signal that you'll ever need. It's just the shit. I mean, you can't deny it, guys. Okay, so then, whabam. Then, how do you enter this, right? This is a pretty fast drop down. And then entering here is kind of risky, because it already blew through one fair value gap. Put in a secondary high. I don't know. If you're patient, though, and you wait for a move down and a retracement back to this candle, there's your ITOB entry right there. There's your perfect 50% touch and dump. You can use a 50% line and have pretty high odds, lessen your risk. You just gotta be patient. It's hard to wait for them sometimes. All right, this is video 3. Video 4 is the last one of this series, and then after that, I'm gonna start another series, because I feel like this is a better way to learn. As always, don't forget to check out my website, companies.com. You're gonna get the best discounts in the funding game you're gonna find. Buy me a trader for you, traders. Blue Knox sale. This one's savage. 150K account for only $13. Had someone in live stream saying today they got funded with this sale. Because you know what? When you're only paying $13.50 for an evaluation instead of $380 or $1,000, like a Forex company would charge you, like legit, a 150K account with a Forex funding firm is at least $500. Yeah, no joke. $1,000 with FTMO. God. $450 for a 100K account. Why are you guys doing this to yourselves? Do you guys just like the pain of losing money, that much money? Jesus Christ. If I'm going to get funded and I have to pay $500 for the test, fuck that. I'm going to go start my own account with $500 and grow it. There's no point. Yeah, I'm just saying, guys, this is stupid. When I got you guys hooked up to get an account for $13, the test is only $13. Like, come on, man. Okay, and 250K is only 33. We don't know how much that is at Forex. $1,500. Apex Trader Funding. Trade with TradingView. Use the code PROVEN50. Make sure to click this picture or this button here to take you to the website. Trade with TradingView. A 50K account is like 37. 100K is probably like 60. Top Step Trader Funding. Also killer sale. Take Profit Trader, 50% off. You're only paying $100 for 50. Top Step, 100K account, only 99. Trade with TradingView, both of those, TradingView. You Profit Trader, more expensive. All right, this is my second YouTube channel. I keep getting asked about funding companies, and I'm like, you don't know about my second channel, but I haven't really put it out there very much. This is my second YouTube channel. I started this one before the one you're watching right now. But the views on funding is a lot less because it's more niche. So I decided to keep them separate. That way I'm not having to blast people that just want to learn trading strategies about funding at the same time, because not everyone wants to get funded. So check that out. It's Verified Trader Funding. I'll put the link in the description. I also do one-on-one mentoring. I don't put this out there at all either. But I do have a couple openings, and I would like to do them because eventually I'm going to start a course, and then this is going to go away. Probably at the end of this month, maybe next month. I originally started doing this so I could have data. I need to know what people struggled with so I can make the best course for people possible. Because it's been a while since I really had struggled, and it was important for me to make sure that the course really helps people reach their trading goals. Check it out. I'll put the link in the description. I can help you. I know that. I'm not really looking to teach Forex traders. I'm trying to kind of get away from Forex, guys. just because the people that are really hardcore ICT fans are from Forex, and I'm trying to get away from, I don't get along with them. We have a different mindsets. I'll give him credit like I did this video. If I'm teaching something that's his concept, I will put it out there and let it be known that it is his concept. I like the dude. I don't like his following. The hardcore ones anyways. I'm part of his following, obviously, but there's a difference between me and those guys. Obviously, if you've interacted with them, they're quite out there. All right. That is a wrap. If you haven't seen the first and second video, they are up on the right hand corner right now. Check it out. These 3 videos go together. They all tie into one. You can be looking forward to video 4.